Okay, greetings to fellow traders. Firstly, I would like to welcome you back again into this topic on taking full advantage of precise trading zones. I believe that, again, I always keep saying that please try to be as interactive as possible, because I think that's the only way that we can make ourselves, more learning to precise trader, and the system. At the same time, we would be making use of the time effectively, right? And do take note of the risk disclosure. This is going to be purely education, and whatever we are going to learn, please, for those of you who are coming first time to our room or first time to our session, what I would suggest is probably you may want to test it out, or maybe want to try it out on a demo account to see whether this system works for you, and how you can make yourself a better trader in the long run. Okay, what we have done is, we have more or less we have developed a system, and the system is quite, it may look complex, but when you learn how to use it, it is very easy to use, and also it's also very effective, because you can take out your emotions, especially when using the system to trade on Forex. I just want to know how many of you in this room have been trading for more than a couple of months, or more than, I would say, more than a year. Just try to quickly answer my question, so that at least I can get to know yourself, so that I can carry on with the session faster, right? And do take note that the crosses which we focus on, all about 36 crosses. For example, like Euro USD, Pound USD, Dollar Yen, Swiss Aussie, Loonie, Kiwi, and Sing dollars, and we trade on any one of these crosses against each other. So, and also sometimes would be very good if you can trade crosses. And how many of you in this room trade crosses as well? Because see, when you learn how to use our system, it would be very effective, especially if you are trading crosses, because sometimes when you are able to identify the direction, for example, like let's say, for example, you're looking at dollar, pound, Aussie, for example, and if you are able to identify the trend, let's say the pound is strong and Aussie is weak, naturally the pound Aussie would be giving you a good reward. And when I say reward, it means, like we are looking at least, like a few hundred pips within a couple of days, or it may be even within a couple of hours. So maybe if I have the time, what I will do is I will show you one example to see how we can use the system to identify good entry points, right? And do take note, the theory behind our approach to the market is it's called price level principle, or PLP in short. Basically, it's the invention which we have done, and this research we have been doing. In fact, I've been doing since I would say 1995. So it's going to be literally almost like about 17 years, and we have been improving on the system, testing it out, and because being as a trader, I do understand the difficulties of putting an entry point, exit point, especially if you are a scalper or a day trader. Sometimes I don't I hope like you agree with me, like some of you you have taken a trade, sometimes you do not know when to get out, especially if you are making money, and sometimes when you are in the losing position, you also do not know how to get out, or how to get out with the minimum damage. And of course, if you've been practicing putting stop losses, that would be the best, because that is one of the best way to take out your emotions from you, because when you put in the order, at least that okay, you're protected, and your account is also safe most of the time. And do take note that we use Fibonacci and the switch clock, moving averages, trend channels, Gann numbers, and also Elliott wave most of the time in our analysis, because some of you might be wondering, because later on when I'm going to share with you the zones or levels, it's because you see, when I show you, you would agree with me that our trading would be purely on our entry, exit, stop loss, all will depend on the levels or zones, because that's how I have found out that that would be the least I would say least emotional. At the same time, you have a proper risk reward ratio, because meaning at least you understand that, for example, when I take in a trade, at least I know that, okay, this is what I'm taking risk. So at least my reward should be, within the ratio of the risk. And usually what we practice is we tell our clients to do at least a risk reward ratio of 1:1. But of course, most often, sometimes, like 1:2, 1:3, meaning in the sense if your risk is 1, your reward should be at least 3 times or 2 times the risk. That's how you make, or that's how you have a proper money management to make yourself a successful trader in the long run. But so you must also understand that when you come to real market conditions, it's not always possible to get 1:2 or 1:3, because especially nowadays, you see the market being in a range trading most of the time, it is very difficult to identify the precise breakout or entry point, with a risk reward ratio of more than 1:1, right? Later I'll be sharing you one example. Then what we'll do is we'll look at the market together, we analyze and we'll study, then we'll see how we can learn the system or use it. And I'm sure, like just now I saw, like some of you have been trading for more than a few years. I'm sure you have a trading system, a proper way of approaching the market, meaning in the sense, okay, if I see the signals, this is what I intend to do, this is where I want to exit. So you may want to try our system to see whether, is it more user friendly, or especially, when you trade crosses. I do believe that this can be a useful tool. Before I start off the session, I always keep saying that, being a trader, you need to do some work before you pull the trigger or before you enter a trade. And I always advise our clients to do, like meaning in the sense, you find an answer to 5 questions, before you pull the trigger or before you enter the trade. Basically, I just want to quickly, tell you the 5 questions so that for those people who are coming first time can take note of that. So the 5 questions are the trend directions, which is the most important of all the questions, and we need to follow the trend at all times. Remember, a trend is your friend, and no matter what happens, you must always be following the trend. But again, that is a tricky question to ask, because sometimes it all depends what time frame are you looking at. Like for example, like you may be looking at a 4-hour chart or 6-hour chart, and the trend may be pointing up. And if the 5-minute time frame is coming down, then you should be waiting for a entry point when the price on the 5-minute hits the low, because that intersection of the 5-minute low together with the higher time frame low is what the lowest point you can get. Okay, of course, in theory, it's very easy, but when you apply in practical, that's where, you foresee some difficulties. So in other words, what I'm trying to tell you is, stick to whatever the time frame you follow or whatever you intend to trade. Then your price target should also be in that time frame, So just to quickly give you the questions. Trend directions is the most important. Next is your entry point. Next, the third question would be your stop loss. Fourth is your price target. And the fifth question is the validity or the expiry of the trade. Meaning in the sense, like for example, you trade, let's say you are being a trader, you should predetermine, okay, what is your holding period of the trade. And what normally I do is, because being a trader by profession, okay, what I normally practice is, sometimes when I take a day trade, okay, what I do is I normally hold my trade for 6 hours or 12 hours, maximum, this is the time belt which I focus in to hold. That means what I do is I take my entry point, then I predetermine this is where I want to exit. Then I also predetermine this is the time I want to close my trade. So what happens is, if the price target is met, then I would very happy to get that trade, because definitely it's going to be a positive, and the price target would be met. This would be a profitable trade. But on the other hand, sometimes, like I may be looking at, let's say, 100 pips move, but the price has moved only maybe 50 or 60 pips. Then, but somehow rather, it was hanging there for maybe a couple of hours, and it did not reach my price target within the time or stipulated time which I've mentioned. Then probably what I do is I'll close the trade during the time belt at whatever the price is be trading. Then I'll accept and try to look for another trade, because the way how I do, or the way how I organize this, is because the reason is you can really control your emotions by doing this. And if you practice literally like day to day, by doing this, definitely I would assure you, like you can be a good trader in the long run. Because, and also remember that, a good system without a proper money management would also not make a trader successful, because you need to have a proper money management as well. That itself is a huge topic, whereby you need to follow certain rules, or when you maintain your account. So that is another aspect. But anyway, we will look at the theoretical part, and this is what we do. All right. Now let me show you one example, and see how. Sorry, let me change the screen. Okay, this is how I prepare myself. If, let's say, I'm a day trader. How many of you are in this room are day traders? Meaning, in the sense, you do not hold your trade. Maybe day traders or scalpers. If you call yourself day traders or scalpers, then what I would suggest is, this is one way of practicing it. Okay, let me show you. All right. Okay, what I do, being, especially if you're a day trader or scalper, is every day I look at, the important announcement to be seen. So, because the reason being is, if you have some announcement, of course, it all depends whether you are a conservative trader or you are an aggressive trader. So for those people who are conservative trader, what I would suggest is, especially when there is some important announcement, like for example, like Canadian, from the Canadian, we have unemployment rate and net change in employment, which is about out at 12:30 GMT, right? So, and I'm also expecting the Canadian dollars right now is trading, in the make or break scenario. Okay, meaning in the sense, if the data is good, then you may see the Canadian dollars strengthening. But again, if the data is not good, then you expect the Canadian dollars to weaken some more. So again, this all depends on, because right now the market is trading in a critical levels. Maybe later on I'll show you how we can look at it and see whether to trade that. So coming back to this, like, you must identify yourself. I always keep saying that, if you want to become a successful trader, you need to know thyself. When I said know thyself means, you must identify what kind of characteristic you have and what kind of person you are. If you are a risk taker, then you fall under the category of aggressive trader. And if you feel that you do not take that kind of risk, then you call yourself a conservative trader. So when you are able to identify what kind of person you are, then that's where you can dictate your rules. That means this is what I'll be doing in the event this happens, right? Okay, anyway, coming back to this. Okay, the important data which we foresee today is like we have it on from the US. We have a producers price index, few from year on year, month on month, and from Canada we have unemployment and net change, and also we have Michigan Consumer Sentiment Index, right? And also coming to end of the week, we must also be extra careful, because you must understand that usually end of the day, end of the week and beginning of the week, we have to be extra careful. And if it also comes to end of the month, again, you have to pay extra careful, because sometimes, that closing of that day's price is what is going to dictate on the move for the following week or the following month. So the same scenario, coming to end of the week, being the last trading day of the week, we have to be extra careful. So what I would want to do today is basically, I would want to become a day trader, right? Or scalper, meaning in the sense I would not want to hold my positions over the weekend. Okay, let me just show you one example, right? Okay. Now, what we'll do is, or what our system does is, we have an alert system, and whenever there is an alert, what the system tells us is, there is an alert, do something, right? The alert doesn't tell you whether, to be a buyer or seller, but all you have to do is, you have to do something, take some action. Basically, that's what the system tells us. So looking at this, we have an alert, and let's see what are the alerts we had. Just now we had this Aussie yen and CAD yen, reaching the support target 1 and support zone. Basically, it's telling us that Aussie yen and Canadian yen are moving down, and Aussie dollars are also moving down, right? It's also moving down. So after that, after I get an alert, what I would be doing is, I would be, just give me a minute, I'll be looking at the next tool which I use, which I call it, give me 1 minute, yeah. Okay, this is the tool which I call it a strongest and weakest barometer. And this tool helps me to justify the alert, okay. Like for example, let's say we take Aussie for example. Let's assume we take Aussie for example. Right now, it has hit a support target 1, which is about 11:08 GMT, right? So let's see the strongest and weakest barometer to see whether that alert justifies the alert. When I look at the strongest and weakest barometer, I do not see any supporting that alert. Okay, looking at this, when I said supporting in the sense, what it meant is, if you are looking the market to be weak, I would expect to see 7 and 8 listed. So when I look at this time belt, especially on the 6 hour, that means this time which is indicated here helps me to dictate the validity of the trade or expiry of this trade. So what I look into is, so Aussie it's not the weakest cross right now at the moment, but it is hitting the low, so that might give me a buying opportunity, because since it's not the weakest, so basically what I do is, maybe I can, because when I look to go long, that means I will get an opportunity to buy at the lowest or the lowest point for that time belt. Let's look at for the daily. Let's see how does the Aussie look. Okay, now if you look at Aussie on the daily, in fact this is the weakest. All right. So what is indicating is, on the day Aussie has been the weakest, but on the 6 hour it is not the weakest. So basically what it's telling us is, we have to look at the chart to see whether, should we be a buyer or should we go for a sell provided if it's a breakout trade? Okay, let's do a few more analysis to see whether that trade is justifying, right? So on to your right, we have the best cross to trade, which indicates, like, let's say I choose Aussie. In fact, Aussie US is the second best cross to trade, at this moment, right? So basically, I would want to trade on that. Okay, let's look at the zones and decide whether to be a buyer or whether to be a seller. Am I going too fast? If you feel that if I'm going too fast, then please let me know. Otherwise, I can slow down a bit. But if you're comfortable with the speed, then, I can. Okay. Right. So if you look at Aussie US, okay, this is where, as I told you, the zones which I'm going to share with you, right? So basically, this what tells us, depending on what kind of trader you belong to. Like if you are a short-term trader or you're a position trader, then probably you can pay attention to daily and weekly time frame. So day traders, I think the hourly should be good enough to pay attention to. So if you look at Aussie, so Aussie basically it says sideways down while 101.70 holds. So what is so special about this levels or this zone? Okay, as I clearly indicated before the session, okay, basically it's not any ordinary numbers. Okay, these numbers are derived by looking at all those tools which I've mentioned earlier on, meaning in the sense we use Fibonacci, moving averages, trend channels, Andrews Fishtalk, Gann numbers, Elliott wave. And what the theory I believe in, or what the theory I apply in, is because you must understand, just a quick explanation on that, or how the theory works is, being a technical trader, okay, you must understand the fact that the market moves on support and supply and demand, right? When the demand is greater than supply, price goes up. When the supply is greater than demand, price goes down. And being a technical trader, what I believe is we have a different group of people trading, or different group of people using the different, following the set of tools, and they are the people who create the supply and demand, So what I'm trying to tell you is, like, for example, if a group that is following moving averages, for example, okay, what does he do is, when they are in control, what happens is the group that is following the moving averages in control, so they dominate at that particular point, and they are the main demand during that time. So the same manner, if a group is following Fibonacci, and when the market reaches a certain level and the market reverses, then the group that is following Fibonacci are controlling the market. So in other words, what I'm trying to tell you is, when we have 2 or 3 groups following together or attacking together in the market, and that's where you see a big spike or a big sell-off, whatever, a big move happens, that means, the majority of the group are controlling that market. So in the same note, you must learn how, or you must understand how these levels are derived, right? So, and what is so special about these zones are, especially if you are using to trade, I would also recommend to use a variance of between 3 to 5 pips, because sometimes the market reverses precisely at that level. So sometimes it's really, unbelievable to see that, the reversal happening at that particular point. Okay, coming back to this. Okay, Aussie, it says sideways down while 101.70 holds. So of course, my safest entry would be price reaching near that, and that would be the least risk with the most rewarding. That means I should be looking for a shorting or selling opportunity near 101.70, but right now it's trading at 100.35 or 100.40, so which is about 130 pips away. So I have to use other ways to entry and exit. And our rules are very simple. Our entry and exit is always dictated at zone 1 and zone 2. So in other words, okay, we have support zone 1 and support zone 2. We have resistance zone 1 and resistance zone 2. So basically, my entry point is always at this level. In other words, if I'm going to be a buyer, I can buy at the lowest point, which is at support zone 1 and support zone 2. I can also be a buyer within this levels, which we call it a no man's zone area. And I can also be a buyer if the price breaks out of 10075 or 10090, which is we call it a breakout trade. So these are the three types of entry points which we use, and the same thing goes if we are looking for a selling opportunity. Let's say we look at Aussie, for example, and let's say I'm looking to sell, okay, because no doubt the trend is at 10170. Okay, my selling point would be, or the best entry point I will be looking to short at near 10075, 10090, okay, which is the next level. But again, if it goes up, then the next level would be Europe resistance zone 1, which is 10110. Okay, these are the three levels I would be looking to short, for the least risk, and this would be my entry point. And my stop loss would be, usually I practice between 30 to 40 pips. So again, it all depends on my entry point. So and also I use a proper money management, meaning in the sense, like if the price is trading at 10075, so usually I enter half of my entry point, so that even the price goes higher, then I can again sell. So at least my average price would be better. But anything above 100,110, and of course maximum is 10170, because if the price breaks above 10170, then I'm wrong. So anything above that, I should be going for a short, and I'm looking to short around that level, right? So now, where do I book my profit? Okay, we have all the zone levels. We have zone 1, zone 2, zone 3, zone 4, zone 5, and the levels which we pay attention closely are zone 1, zone 2, zone 4, zone 5. These are the 4 levels that plays a dominant role in market reversal, or especially if you are planning to exit, or and even putting stop loss, entry, exit, and stop loss. All these levels would be depending on this level. Okay, now let's maybe you take down. What I would suggest is take down this level. Then we look at the chart. Then we decide where are we going to enter, where are we going to put our stop loss, then where we want to book our profit. Okay, take down these levels: 10075, 10090, 1000110. This is on the top side, and right now it's trading at 10040. Okay, downside is I'll look at 10015, 100. Okay, these are the 2 levels, and of course 99.45 and 99.20 are the levels where I plan to book my profit, right? Okay, now let's look at the chart. Then we decide how we want to enter this trade, or how do we want to trade this entry, all right? Okay, let's look at, let me zoom in from weekly. Okay, the weekly trade, or the weekly time frame, is trading well below the open, and it is trading near the lows, right? And daily is we have a registered low, which is 10020 on May 9th, which is the day before, and right now the market is trading above this. So right now, because there is a possibility that we may have seen the low, or if it breaks that low, then it may be a breakout trade, and it may hit south, or meaning in the sense further down. All right, this is the indication I'm getting by looking at the chart. Then again, by looking at a 6-hour chart, okay, right now it's making more or less, it's a double bottom. Okay, now looking at the 15-minute, this is where I decide where is my entry, exit, and stop loss, and how am I going to trade. Okay, let me highlight those levels, for the benefit to see. Just give me 1 minute. Can you all see the price? Okay, and 1 0 15 10 and 99.45. Just give me 1 minute. Are you all able to see the levels? Right. So what I've done is I have identified and drawn the lines on the chart so that when I look at it, when I look at the chart, it looks crystal clear for me. Meaning in the sense, this is where right now the market is trading within the no man's zone area. So if it moves higher, then I would be looking to short around this level. If it goes lower, this is what. By looking at this chart, in fact, what I see is 10015 and 100. Okay, I feel that the downside may be limited. So again, I'm not going to take a breakout trade on this. So that means, if it breaks below this, I would not be going for a short because it's more a risky trade. Unless, if let's say I draw a channel, the price should go below 100, then we can see about 99.50 level, which means that another 50 pips lower, provided this is a convincing break. Otherwise, we may get a false break and the market may move or push higher. And what is so special about these levels? Maybe I want to show you one thing, on a 1 minute. You can see the levels like crystal clear, meaning in the sense, whenever the price reaches our levels, the market does respond. And this is also another clue I look from the market, okay, meaning in the sense, if the market responds to the levels, then I know that, okay, this is in phase with the levels, and it gives me extra confidence in my entry or even putting my stop loss, especially when the market responds to the levels. So this is just like I always keep saying that I'm just like a weatherman giving you a weather forecast, and if you see the market is responding to our calls, right, then probably you may feel that there's a confidence in you, then you can pull the trigger on this. So looking at this, if I'm going to have a trade set up, what I do is right now it's 10043, right? So probably what I may want to do is I would want to short near one. Let me give you a trade setup based on this. Okay, what I'm going to do is I'll be looking to short. Okay, this is a limit sell near 10080 and a stop loss about 40 pips, and I may plan to exit maybe within 50 pips move, meaning in the sense because it's trading within the no man's zone area and coming to having in mind that this is the last trading day of the week. So this is the trade I want to enter. If I get it, I'll take it. If I don't get it, then I don't regret, because I always have this practice of, because the market is always there, and being working on 24 hours. So this is what I do, and this is what I key in, and I'll wait for the market to respond to our call, meaning in the sense, this is what I do. Because when we practice doing this, of course the advantages and disadvantages. The biggest advantage is that you are trading the market, and I don't see the reason of emotions coming in. All right. And on the other hand, the frustration might be sometimes, the price may try to reach that level, then sometimes, you may miss that entry point and the price starts to fall, but that is part of the game, so I think you have to accept it, and you have to keep on doing it to see what best suits you and how we can look into into the market with ease, right? So now, any questions so far, about the levels, systems, and this? So I can look into the questions, then from there, if we can also look at one live examples, and maybe I can get one of you to help me to choose the trade and do, so at least I know that, okay, you have been with me and you have been following the system. Okay, so if you have no questions on this, let me quickly run through the thing. Then what we'll do is we'll do one more example. But the first question I saw was, okay, let me run through. Just give me 1 minute. Okay, please explain the trade in trending and non-trending market. See, basically, what I do or what I practice is, especially, I like to pay to see whether, if it's sideways, then definitely I know that this is not a trending market. But of course, if I see up or down, or the words like sideways down, sideways up, turning down, that are the words which I like to look on the hourly for me to hold on the trending market. But again, if you see, like for Aussie, for example, in fact, this week, our call for this week is we gave to short Aussie, to short Kiwi, and to go long on dollar Swiss. These are the 3 calls which we gave for this week. And even though, it's all says sideways down, but again, the only point to take note is because coming to the last trading day and last trading session of the week, so we have to be extra careful. That's the only word I can say. So another thing is, whenever the market is trending, okay, another tool or which you may want to use is, I normally do is, I pay attention to moving averages, which, like for example, if you look at this, the moving averages are, well spaced apart and still pointing down. So this is a trending market on this time frame, which is about 120 minutes, which I'm sharing, right? And another tool also I use is ADX, which also helps me to decide whether the market is in trending mode. So especially if the market is in a trending mode, that's where we can practice putting trailing stop. Otherwise, it will be best to just have the price target or profit in mind, and it's a good way of booking the profit whenever the market is in a non-trending market, right? Okay, the next question is your system mechanical? Okay, this is the system. As far as the system is concerned, okay, I've been working on it for the last, I would say, aggressively for the last 7-8 years. And being a trader, I do understand the difficulties of traders, because sometimes, especially 10 years ago, I used to look at oscillators. I used to, in fact, you name the tools, or literally I would have tried the tools, and I do have a collection of about 700 books in my library, so you can imagine that how much of research and how much of eagerness in learning this trade I put in, right? So the only thing is, the system was developed basically being a trader. We want to make the trade decisions or identify the trade decisions with ease, and especially, we focus with 36 crosses. So you must understand how effective the system has to be in order for you to identify, which is the best crosses to trade during the particular trade time belt, right? I trade Aussie. Connect this. Okay, let me see whether any more questions. Okay, I do not use harmonics. Okay, basically, I'm a very firm believer of Fibonacci, right? And what I have done is, it's even as Fibonacci, it all depends how effective is your point of choosing, especially Fibonacci, all you need is you need 2 or 3 points to project the Fibonacci. But you must know which point to project from, that's what makes the accuracy of your projection, right? Can we go long on the break of 105.50? Speculator, can you be more precise? Which cross are you talking about? 105.50 is. Are you looking at Aussie or which? Maybe if you say, then later on I can answer your question. Right. Okay. Canadian, Aussie, yen. Okay. This is I see a huge thing here. We have, yeah, maybe I think it's given. Maybe you can look into this and see. Okay. Is your system identify support demand automatically when prices reaches level? Okay. All those, just now you saw the barometer like strongest and weakest. It's all live prices. Okay. Meaning in the sense, when the market moves, you get automatically, meaning in the sense it's all automated. But of course, the good and bad about that is because sometimes you may get a false break. Because what I meant by false break, sometimes, the system shows that the strongest cross at this moment is let's say, for example, dollar yen. And there was some announcement from yen and it may be from the strongest to weakest. So again, that is a tricky part which we need to learn to use the system. The more you use the system, then the more you can identify how it works. Then you can understand the way how the market behaves. Then it will be easy for you to identify the turning points. Let me see. The trending market, our levels get reached in Asian session and moved on. In non-trending market, I get this level works on Europe session. Is there any timing to fine tune to reach level with timing? See, basically, that is the difficult question, or difficult to say that one perfect answer. Because see, in all, you must understand how the theory works is when, we are looking at a y-axis and x-axis. The x-axis is the time and the y-axis is the price level. So when I said, I look at the levels and trade, the x-axis has been overlooked. Okay, that's where I set a rule of saying that we need to predetermine to say that what is the holding period of the trade. So when you predetermine that would help us to decide, or that would tell us, okay, no matter what happens, if the price doesn't reach that price level, then I'm prepared to close, unless, you sit down and reanalyze and to see that, okay, maybe the next time back, you can expect the price to move further high, you may see that. So, but other than that, it would be good, to have, to pay attention to the levels, because the only biggest advantage I have, when I take my entry at the levels is, I know I'm dictating my risk reward ratio. This is where I'm going to enter. This is where I'm going to put my stop loss. This is where I'm going to put my exit. So at least I know, okay, this is my risk. This is my reward. So when the trade works out well, then definitely I know that, okay, this is a good trade, which I've taken. Right. Okay. Based on the report in your website, can you give entry on CAD? Right. Okay. Let me show you. Okay. If you look at dollar CAN, for example, okay, we have 10070, 10085, and looking at sideways. Okay, this is the hourly is saying sideways, but the level is down. So basically, I'm a buyer, right, for dollar CAN. Of course, the best entry point would be buying or going long near 10010 or 99.95. This would be buying. I call it buying at the valley or buying at the lowest point for the day, and anywhere between 10070 and 10010. That's where during this is a no man's zone area, but this is where we can tell to buy on pullback. But I look for a breakout trade, which is the second time break of 10085. Okay, would be my breakout trade. Now, after looking at all this, let me see where's my price target. If let's say I look to buy at 10085, my price target would be 100120 and 10180 and 10165. These are the levels where I would like to pay attention. Maybe you write down these levels, then I'll show you on the chart to see how easy to trade with this way of looking at it. Okay. I repeat, I look to buy near 10010 or 99.95 if I get. All right. Other than that, I would like to buy anywhere in between this level. That one I'll let you know once I look at the chart. The next, my entry point is the breakout trade is provided. If I see a break, the second time break of 10085, that's where I want to go long, right? So these are my three entry points for buying. And my price target would be 10120, 10165, 10180, and of course I have one more level with 10140. Okay, now let's look at the dollar can chart and see how can we trade this. Okay, let me zoom into a weekly chart. Okay, weekly chart is trading well near the high and it's trading well above the open. So I think, it would be safer to buy this cross. Then daily is also trading above, but it is reaching a resistance level which is 100. In fact, yesterday's high was 10065, right? And 100. Let me highlight those levels first. Then we can see. Okay, 10070 is our zone 1 level. 10085 zone 2 level. 10120, 10140 and 10165. Okay, let me on the downside is, I told you, it's 10110 and 99.95. Okay, let me zoom in. A 6-hour chart is also moving up, so I don't see the reason why. Okay, now coming to 15-minute chart. Okay, this is what I see. This looks, see, this scenario here, it can be a make or break scenario. So basically, early on, I remember, seeing we have an important announcement from Canada. We have something unemployment. I remember seeing unemployment, right? So irrespective of the data, okay, let's say the data is good. Okay, let's assume the unemployment is good and it is supportive for the Canadian dollars. So what happens is, it may start to sell off and you see the price coming down, okay, after the announcement. But on the other hand, if the data is not supportive to the Canadian dollars, then we may see the breakout happening. That means, the price we should be able to see a spike, towards that 10085 at least. Then we may see some consolidation happening between 10085 and 10070. So having this in mind, having that figure in mind, how do I trade this cross? Is I would maybe, remember I said I'm a buyer, right? I'm comfortable in buying, right? So basically I would put an order to buy at near 10115. Okay, that's where I look to buy. If I see, I'll buy this. And on the other hand, I have to see whether the price breaks above 10085. Then I may want to go long. But otherwise, that 10085 may be a strong barrier and the market may start to fall. So looking at the chart, having the figures in mind, this is how I expect the market to respond. Okay, meaning in the sense, you can wait. I think we have another, I would say another about 40-45 minutes left. You can see how the market responds. But if the figure is as expected, then you may see the market still consolidating, right? So let's see what happens. Then probably, when the next time you come in for the sessions, then at least we can discuss further, how to trade during that news, right? Which book is best to read for trading? Okay, it all depends on your interest and what is the system you want to adapt to, right? There are plenty of books. Okay, in fact, what I can do is, in fact, the first book I read, which was interesting, I would say, it's like Trading for a Living, which is from Dr. Alexander. That's the book which I like. Then also a book from John Murphy, Technical Analysis, this brown color book, if I recall, and also Candlesticks by Steve Nissen. So there's plenty of books, but again, you must understand that what is your interest and what is the system you want to adapt, and you can focus on that book rather than, I give you the book to read. Like I did mention earlier on, you must know thyself and you must know what suits you and what interests you, and that's how you make yourself a better trader in the long run. You remember that one man's bowl of soup is another man's poison. Depends on what you can do and what you want to do. That's what is best to have your focus on. False breaks to take out stops. Okay, sometimes this is something which I can't give you a perfect answer, because what I feel is, when you get a false break, you get stopped out. This is part of the game. Okay, and in fact, that is where I tend to lose money most of the time. That means, like whenever I lose money, usually it happens on a false break, and there's nothing much we can do unless, you are in front of the market. If you feel that it's a false break, then you re-enter again to cover your losses, or re-enter again. And that's another way of practicing. But in actual fact, trust me, it's having a stop loss is always good. So I think it would be best if you can really, practice, putting stop losses. Okay. Are you talking about breakout on 15 minutes? Okay. I do not use pivot points. So, that's something, which, I'm not fond of, but basically this is a system which I've developed, and I've made a lot of changes, and it's there's more tools. This is just only one tool which I'm sharing with you. Another tool which maybe I can show you is just one last before we can end the session, because it's coming towards the end of the session. Okay, this is the tool which I call it a dashboard. This is another tool which I use, and what it does is, this is a live price on the levels itself. So it can clearly indicate where is the market, whether the market is breaking down or breaking up. So at least it will be easy for you to identify, which market is moving. And in fact, this tool helps me to decide, which cross to trade, which is the best cross, and all this, it helps me to choose on that. So this is a very powerful tool which I always use in my trading decisions. So this is the thing. Okay, let me see. Okay, for those of you, again, if you feel that this system is complex, or you can't understand, of course, like anything, you must understand that any gadget, for example, any gadget you may buy, it's good to look at the manuals and learn how to use the gadgets. Like, for example, let's say you're buying an iPhone. Okay, I don't expect, each and every one of the people buying the iPhone to really, learn what everything in the manual and take full control of the iPhone. Whichever that interests you, whichever you find it useful, then you use it, and that's how life goes on, right? So I'm not saying that this is the best way. This is one of the way which you can use it, and definitely I would say it would take out emotions emotion free, in trading to a certain extent. It can be an emotion free trading. Okay. Once again, thank you very much. I think it's been almost an hour. Once again, thank you very much for coming into this room, and I also take this opportunity to thank FX Trade for organizing this wonderful event, and looking forward to see you again. If you have any doubts or any questions, you can feel free to write to us. Okay, our website is precisetrader.com. All right, and once again, thank you very much. Have a great weekend, and hope to see you again. Till then, goodbye.